All right, welcome to the midday session. That should be working now. If it's not, let me know. Sorry, that was a little bit of adjustment to get this going midday. I just have too many applications open is the issue. All right, so let's just kind of go through. We'll talk about the major indices. We'll talk about market breadth, and then I'll give you my viewpoint on the day. As long as I can adjust and change things up here a bit. So we've got the S&P down about 85 basis points. We can see we're off the lows. You've got the Qs, which have had a nice little rebound here. They're down 60 basis points. And you got small caps down about 60 basis points as well. So,
and more here from McDonald's says it's seeing higher average check price
really
checks across the business.
In terms of what I said, we have a lot of events coming up the next couple days, so we haven't gotten past any of them. So the couple things that I talked about is, of course I want to see the VIX come in a bit, but I don't really see it going that far because we still have all that uncertainty in front of us. So there's a couple things that you could think about. Is the VIX should be coming down, I would think, once the events start to come out. So we just haven't gotten to that point yet where we have the State of the Union address tonight. We have the Fed meeting tomorrow, and we have a ton of earnings that are coming out the next couple days. So unfortunately for today, none of that is going to go away. So you can start to pick your spots in some things. The one thing that I could tell you is that we're not seeing a ton of call buying in things today. So, and that just could be because of all those events. If I did see a lot of call buying in some things, the one thing I've seen a couple times now is some Micron calls, which I have a January Micron position. Just hold on one second. So you can see the VIX is off the highs, which is good. And maybe might be setting up for a reversal bar. But again, I'm having a tough time really thinking about, what we're going to get out of this market today. So if you're comfortable on buying in some things in the dip, which I am, I started a position out in XLF in January. So everything that I'm doing is far out, right? Is pretty far out. Adding to some positions in January, July. I don't want any short-term, I really am not playing for a short-term bounce. I'm playing for the overall trend, a little bit about what we talked about before. How's the mic? Does the mic sound okay, by the way, guys, with this adjustment that I made? Yeah, this Vive is definitely interesting. So here's a name that I think is interesting. It's fine. Okay, good. Thank you guys. Yeah, this is a name that we talked about Sunday night in the chat, breaking the 200-day moving average. And again, looking for some things that are a little bit off the beaten path of, if there's index pressure in the S&P or in the Q, some names that are not that big of a part of it. So we found this one. Sunday night. What alerted to me the fact is I ran a scanner and I looked for names that just got above the 200-day moving average, and I thought this one was interesting. So Vive looks really strong to me. I did not get in it. I did not get in this one. This one got an upgrade this morning as well. So that's just kind of going, and then I'll go into some single names and so forth. But that's my sense for the market is that this was an excuse to take profits. The other thing is month end, which we've been seeing a little bit of selling into month end. So all of those things that I mentioned, watch Twitter, yeah. All of those things that I mentioned that are happening this week are exactly that, short-term events. Yeah, Twitter looks pretty strong here, launching through the top of value, which is where we sold yesterday. So here's a perfect example. Twitter really won't be that affected by some of those things. Yeah, I just actually hit a target in my March 25 calls. I mentioned that I had a small piece left in Twitter. So real nice move here, cutting through the top of value. Just got an alert that the VIX is starting to move down again. All right, so that's how I usually play these dips. Is I never go all in whenever we get a dip. Anyway, I start to buy some things that I think are really interesting. You know, that I think are at good spots. And then I start to, as I see the VIX start to come off those heightened levels, then I start to buy more. And you could see, like, this is what we want to see here in the VIX, right? We've seen this before. Again, this is a developing bar, so we don't know how it's going to look at the end of the day. But let's see if I can zoom out here. There's some Twitter calls going up on the bid side. Those may be bought, in fact. But you know, this is VXX. I'm sorry, this is the VIX here, and of course I've got too many applications open, so that's why I'm getting stalling here. There we go. So frustrating. Let me try to zoom out one more time. Yeah, so we've seen these before, right? And that's a good indication that the VIX might be starting to come in, is once you see one of these candles where you've got a really long tail to the upside, kind of looks like a shooting star type candle where we go higher and then we close lower. So again, the day's not over yet, but that's been the pattern over and over and over with the VIX. So I did put on, that's probably the biggest trade that I put on today, is that VXX credit call spread, where I'm looking for, and the reason why is this relationship. The VIX, at one point, this is obviously had reverse splits because the VXX never traded at 420. But so anytime I see you know, the VIX get a short-term spike, I like to fade it. So I will, you know, I bring out that trade out of my toolbox in terms of selling volatility after a spike of volatility. Where again, what do we know? All those events that I talked about, month end, the Fed meeting, the State of the Union address, and you know, huge earnings reports this week. Those will all be gone, you know, in 3 or 4 days. So that's why I expect volatility to come out. I did get a question. They said, why don't you just, somebody asked, why don't I just buy puts? If I'm looking for the VXX to go down, why don't you just buy puts in it? Well, because they're extremely expensive. If you look at the implied volatility, if I can bring up Bloomberg, there we go. You could do it. You could do it, computer. And try to bring up the option screen. But I looked at the, so I'll go over the trade that I did, and then first I'll bring up the puts. But notice the implied volatility, which should be in here. Yeah, I mean, look at it. For February, it's an 83%. Yeah, Watt is moving up nicely. So look at how expensive this is. This is not cheap to buy. So if you're trying to bet or put a trade that you think the VXX is going to go down, look at what it's going to cost you. It's extremely expensive. That's an 83 implied volatility. So that's why the only time I will ever trade the VXX is when I'm looking to fade it. versus looking at the S&P, and you're talking about an implied volatility of 13. So it just doesn't pay. I don't think that that's a reasonable trade to buy puts in the VXX. So the trade that I look to do, which I've had some really good success in this trade, is you go back to the calls. And what I decided to do was give it a little bit of time. So I went out basically a month. And I sold the 28.33. So I actually went a little bit in the money. And did a $5 wide call spread. Looking for that VIX to crash by sometime throughout February. All right, any questions about that trade? And I know that's a little bit of a complicated, high implied volatility, sell it. That's the whole idea. And then to, also take advantage of something that's in a major downtrend that's getting a move up and selling it, and then giving yourself plenty of time. All right, so that's what we've got for the S&P. We have broken the 5-period moving average, which we've basically been. I talked about the moving averages last night in the webinar, but we've been above. The S&P has been above the 5-period exponential moving average for the better part of January, basically all of January. So now we have, finally prices coming in a little bit. I don't know if we're going to see it get down to the 20. Or if this is all we're going to get, and we'll resume the trend to the upside. What it does look like is we're going to start the month in February inside value, right? This is a developing value area, so it's not going to change that much more because we got 2 days. So that, which could indicate chop, right? When we open up the month inside value, it could mean that we have some chop on the horizon for the overall market. Let's see what NASDAQ looks like. And again, that makes a lot of, again, why I use the value areas with the moving averages is because, number one, we've appears that we're losing the upside momentum, and we might be starting the month in value. And looking at how it lines up with the moving averages, kind of in between right now the 5 and the 20. So could have a little bit of chop in the near term. But again, that doesn't mean that you're going to have chop in the single stock names. We've had that for multiple times during 2017, and it was a favorable trading environment on the single stock side. You can see market breadth, I think, is a little bit off the lows. I didn't talk about that one too much last night because we really haven't had to use it much. So market breadth for the day has gotten, I don't know, has it gotten slightly better? Let's see. Slightly better from the lows, but certainly not out of the woods yet in terms of market breadth. What this means, by the way, is a negative 6.82. That's all NYSE issues. So the further negative it is, the more names are down and on volume. NASDAQ is a little bit better, actually much better. That's a negative 2.5, and a negative 2.7 on ARCA, which is mainly ETFs trade on ARCA, in case you were wondering, or if you've had this indicator. And this just kind of gives you a pulse. It's a coincident indicator, just kind of tells you what's happening. And I think that makes a lot of sense on the NYSE side. And it kind of goes into QTNT. I did not get into that one, JW. Thank you for posting it. But you know, if you look at some of the areas that are down a lot and where we're seeing a lot of the protection buying today, it's mainly in the energy names. So if you go to the option activity that I sent out, you can see on the put side, and I'm not capturing every trade here on the put side, but a lot of what I've seen on the aggressive put side is put buying, and I would say it's protection in OIH, XOP, a couple single names as well, like Rio and Deer. But mainly, you know, I saw a couple other names too, where we saw some puts go up too, and it's mainly in commodity related names, both oil as well as just overall commodity names. There's a little bit of FCX put buying as well. And you kind of look at your leaderboard and you see XOP is down 3.6%, XME down 2.6%. These names, they were mentioned on the midday show on CNBC, and I don't know what they were looking at. They were talking about, I think, calls and XLE yesterday? And I didn't see anything aggressive at all. I saw aggressive puts go up yesterday in the energy ETFs, but I don't know what they were talking. I honestly don't know what they were talking about. That was I think their number one trade from yesterday. How about this RSPP name? Anybody know that name? There was some call buying in that name. This is a $3 stock. I don't know this name. If we'll look into this a little bit more. Let's see what the chart looks like in QTNT. I think the healthcare names, which kind of got smoked early, they've come back a little bit. Oh, I see what you're looking at here. You got some support back here. A name well underneath the 200-day moving average, but certainly you've got you know, this $3.20 support. So, you know, as long as you're looking at some level to get you out of $3.20, I think would be your stop in this name. And I'll shift over to XBI. Yeah, I mean, look at the candle that XBI is basically back to where it opened. A nice move off the lows here in the biotech ETF. So, you know, a little bit weekends when news comes out like that. But someone asked right before the open, they said, "Are you looking for shorts in the healthcare space?" And my answer was a definitive no. You know, I think some of this is an overreaction. Do I know which names exactly I would go long here? No, not necessarily. Names that really just have kind of gotten caught up in the storm, but you can see we're well off the lows, and we're basically back to the open in the biotech ETF. Perceptive owns 16% of that company. Yeah, XLV is basically back to the open as well. I'll try to bounce a little bit. This RSP Permian is one name where we saw some calls going. A big block of calls went up. And this name is in an uptrend, but slid. I don't know what the news is on this RSP company. can't bring this up here in Bloomberg. Okay, so last thing I'll say, and then I'll turn off the recording for just overall, just overall strategy. The other thing I heard this morning, like right around the open, is, it seems like there was a little bit of panic because the market was down a little bit. I don't want to kind of gets me a little bit afraid if anybody is in that situation. We've had an amazing run in the market. If you're not taking money, if you haven't taken money off the table, that's taking profits and in more of a comfortable place, I think you want to reassess what you're doing in this market. I mean, we have had a tremendous run. There's going to be dips from that. We're going to see dips every once in a while, and you should be prepared for that in this market. So to ask, what you don't want to be doing is when we get the dip, get all in a fluster and say, "Oh my God, what should I be doing now?" So we've been talking about that in this room just about every day for the last week, of taking money off the table. If you're choosing to go into the market, go a little bit further and take smaller size. But you can't, if you're expecting this market to go up every single day, that's not how this that's not how this works. It's not how the market works. So please take a step back and reassess what you're doing. If you were in a panic mode this morning because the S&P is down almost 1%, you're not thinking about this correctly. Because the market, again, cannot go up in a straight line. We've been talking about how overbought globally equities have been. So you have to have some dry powder to come back into this market and be taking profits all along the way in options positions. In cash positions, if you're following the trend, so be it. There's no fracture of any trend. I took some profits the other day in emerging markets because I thought we were way overbought, and that seems to be a pretty wise thing that I did in that. But so I just, I know most of you know this, and most of you have done an excellent job. We've done an excellent job trading all year long. But for those that are nervous because the market's down a little bit, you have to be kidding me a little bit, right? And so I'm just talking to those of you that are in that situation. You should not be in that situation. And if you are, then yeah, dial down your risk. And every time we get a dip, you should not be looking to double down. That is not trading. That is, I don't know what you're thinking about. So, yeah, take profits, let things wash out, get back in, and then the old rinse and repeat. And if anybody wants to talk about that more, they could private message me, and I can go into details about what or where you are in the process. But again, that's why we do the midday sessions, and that's why why I focus so much on risk management, and not just looking for new trades, but clear risk management and strategy, because that is more part of the game than taking individual trades. All right, so we'll start going through a couple individual movers. I think a couple of you realize that even the names that you want to buy in the dip today, the implied volatility, like Facebook, I think is the last time I looked at it was having a nice recovery day. And this thing is Facebook is almost up 1% on the day. So the problem is that Facebook, the implied, if you're looking to do like the regular weekly trade, or if you're looking to buy short dated calls to take advantage of a bounce, the implied volatility is super, super jacked in all these names because they report volatility. You've got a big event coming up for all these things. Same thing with Amazon, same things with Google, same thing with Alibaba. So one of the things that you could do, because if you look at the implied volatility for this week, it's going to be much higher than it is for the March or the April calls. So, you know, that's another thing to consider is maybe buy some further dated calls if you're looking to play the bounce. I mean, look at Amazon is up $10 today. I don't think Bob is in the green yet, but has recovered a little bit from the lows. So most of these momentum names, the weakness was very short-lived. I think it again is being certain other areas of the market, the oil, the commodity group. Like look at XME for example, which has a lot of steel in there. That's down 2.6%. So really, the commodity space has gotten hammered. Yeah, and this looks different, right? I mean, here you've lost the upward momentum of price being above the 5-period moving average. And for the time being, again, developing bar, but it looks like we're breaking the 20-period moving average. And even we might even open up, again, we'll see if it recovers, because I think this is a pretty dramatic move. Of 37.79. So even like, you know, so the other headline that's out is Trump is planning an infrastructure plan. But keep in mind how these things work, right? You know, a good example was First Solar. Right? This is, so you kind of have a little bit of a playbook for, you know, if they announce an infrastructure plan, look at what First Solar did. Huge run up. They announce, I think it's this candle. They announce tariffs on solar panels and the stock fades. Why is that? Because it's a buy the rumor, sell the news, right? You buy the rumor of what's going to happen. Once they formally announce it, you get a fade. So that could be happening with the steel names, and all the infrastructure plays. I'm not looking to buy any of the infrastructure plays going into the announcement. And that's just my personal opinion. We did see some calls on one of these infrastructure plays yesterday, PWR. And you can see it's down 1.7% today. No teeth. Okay, no teeth to the tariffs. Okay, so maybe there's something more to it than my interpretation. Thank you, Bob. I guess they were expecting something more. Yeah, U.S. Steel getting smacked. What happened to Newport? Newport was up pre-market on earnings. Yeah, it looks like Newport gave that back, down 2.7%. They got good numbers. But again, big run up, right? FCX seems to be holding in there. Copper's only down 10 basis points this morning. S&P selling off a little bit more as well. So my gut tells me that, you know, probably tomorrow afternoon, we might start to see things turn back up. Some areas of the market. Obviously, some things have already turned back up, Facebook and so forth. But I mean, overall market, overall volatility. I think once we get the Fed decision out of the way, and I'll be structuring a trade for tomorrow. Pfizer thoughts, sure. But I think once we get some of that out of the way, as more and more events get out of the way, I think you'll start to see the nervous hands and as well, month end, which is tomorrow. So that's why I say tomorrow afternoon, and I want to position a little bit into that. If we happen to go down a little bit further tomorrow, I want to scale into things. So I started, this Pfizer is kind of crazy. It had such a big move, it becomes a little bit hard to read. I think your support is going to be the top of value for the month of February, which is, again, developing value area because the month's not over. But right around 37, 34, I think is what you want to see to be maintained. All right, so that's my plan. If we happen to go lower this afternoon, lower tomorrow morning, I will be adding to positions. Because again, I don't have a reason why we would completely just turn around today and go higher. Certainly, the call buying is not there for that. All right, so that's my my overall thoughts. And again, the reason why I was just pretty adamant about making sure, like assessing what you're doing, because I don't want to see anybody get hurt. And there's really no reason after the run-up that we've had to get hurt at this point. You shouldn't be, looking, for another 10, 20%, replicating what we've had so far in January. After, I think it needs to back and fill a little bit, which is kind of what we're doing a little, in some areas. But, so again, I don't, not trying to scare anybody, but I want it to be a little bit of a wake-up call. Yeah, exercise, patience, while we have a market dip, that it may take a few days to work itself out. I like what they're doing here in Micron. There goes more Micron calls going up. Sweep detected in Micron. That's why I put on a January position. So what I would do, so here's a good question. And we could kind of think about this. This is a question related to Amazon. I'm holding some Amazon, and you want to stay in the name for earnings. Right, so you don't want to completely get out of it. So there's a couple different things that you could do. Number one, I would purposely, if you're in Amazon, I don't know what Amazon you're in, but if you're in let's say March or April options, you could take you could do a couple different things. You could take your profits and you can roll out and up. Maybe you go out to July or something like that in your Amazon position if you believe in Amazon for the long term. So you can, basically what we've been doing, you're just taking profits in your nearer dated calls and rolling out and up. Would you buy the June 1800 calls? I think that's pretty far up there. You could also do a call spread as well. You could do something like, I was looking at Amazon earlier. What was I looking at? And you could also sell a little bit of calls, weekly calls against your Amazon position. But I'm not sure I would do that. I was looking at something like the June 1500, 1520 call spread. So keep in mind, whenever you look at these strikes, compute where you think it could go to. 1800. Is about a 25% move. So that's a lot. Yeah, so that 1800 is about 25% move. So I think that's pretty extreme. I would do something a little bit more closer to the money that would give you more of a higher probability of working, and I would do probably a call spread for something like that. All right, let me go ahead and turn off the recording because this thing is just getting jammed.